So today I'm going to share with you the difference between financing an established business versus financing a startup. And you really want to check this video because otherwise you'll make one of the biggest mistakes that I see entrepreneurs are making. So hey, my name is Moran Pober. I'm the founder of Acquisitions.com and I'm here to share my journey in the business buying world that I'm going through, that my clients are going through. And this is for you to go out there and buy your businesses as well and build your wealth that way. So many entrepreneurs that reach out to me, they go out there and they have this crazy new idea and they want to get financing for their idea. But the biggest problem that I see with them is that they go out there and they try to raise capital for something that have no product yet, no revenues, no employees, no customers, literally just an idea in their head. And I want to explore a little bit more on why you see those big differences between how easy it is to establish financing for an established business versus financing just an idea in a startup. So the first reason is that when you go out there to most financial institutions and you want to raise capital for an established businesses, many more financial institutions understand those established businesses. They can look at numbers, they understand those sectors, especially if those are sectors that exist for many years already. Versus if you look to raise capital for a startup, usually startups nowadays are in the technology space like AI or data, big data and all of those crazy keywords, right? So in order to get financing for those ideas, especially if there's no revenues yet and no product, you will need to find very specialized investor. Many times people like VCs, venture capital firms or angel investors that are specialized in investing in those startups. Another reason that it's easier to raise capital for an established business is the fact that there is less risk when you talk to a financial institution, financial partner, or just any money and capital that you can bring into your deal. There is much less risk into buying something existing, established with an established P&L, and there's a balance sheet with tangible assets many times. I don't know many startups, basically none of them, with tangible assets on their balance sheets with things like accounts receivables or inventory or equipment or real estate. When you go and look at an established business, if it's yours or an established business that you want to buy, you already have those assets in place. So when you go to a financial partner or financial institutions, they can look at those assets and have a very little risk because worst case scenario, they can have access to those assets if something happens. And if you want to understand more about that, go and open a new tab in the meantime and search my channel for the keyword financing or capital and learn about that aspect and process on how you can raise capital for an established business. Versus, like I said, when you look at a startup, it's going to be much more challenging and your opportunities for financing are going to be much more small. Another thing you want to remember is the fact that the bigger the business is, the less risk there is. Obviously, a business with thousands of customers, thousands of employees, many products, years worth of basically financials that you can look at will be much less risky than a startup that still don't have all those things. And if you still don't believe me that it's easier to raise capital for an established business or an acquisition, a business acquisition, which is what my channel is all about, then just go and try to get this quick action out of your plate basically and get to understand it yourself. Go and make phone calls for 2 different banks. For one of them, tell them about an established business that you need finance into, especially if it's a business doing around more than $1 million a year in revenues and is existing for at least 5 years already and you need help to finance that deal. And compare that to the responses that you're getting if you're just pitching an idea or a startup or just a crazy unique scenario that you want to explore. Go out there and give it a try and tell me what you think. And in the meantime, hit the like button and subscribe if you didn't yet. And let me know in the comments below if you ever tried to raise capital for an established business or a startup. I would love to see your answers. So I hope this video helped you at least realize my thoughts about startups versus established businesses and why I suggest people that, especially if they don't have their financial life handled yet, don't go and explore those crazy ideas with startups because 99% of startups fail, unfortunately. And that's why I highly suggest you to go and buy an established business as your first successful business, or even if you have an existing business, go and grow it by acquisitions. Now, I know we compared startups to established businesses right now. I'm sure your next question is, hey, why are you all about established businesses when there are things like real estate out there? So if you want to check that out, go and look for that video right now on the differences between real estate and business acquisitions, and I'll share with you my thoughts there as well. So go and check it right now, and I'll see you there.